want to go to Scott Gecas. He's in Chicago right now, and he's with Walsh Trading. And Scott, what do you hear from the traders out there behind you and on and about the floor there about what they think for planning progress this coming Monday here?
Yeah, the planning progress is definitely going to be a driving factor moving forward. And just like you said, you know, the corn producing states are well below that 30% mark. Same with soybeans. Now, we had a benchmark of they had to have 50% in by next Monday. That is not going to be the case. There's no way that's going to happen. So we got to wait and see what the confirmation with those numbers coming out. But the planning progress is definitely one of the key aspects moving forward. And that's what the traders are definitely watching right now.
Let's take a look at the trade and go to the corn board in Chicago right now. We'll take a look first at July. It is 4.5 higher, actually gaining a little steam heading toward the weekend here. 383.5 is our last trade, only a couple of ticks from our high of the day. In December, 2 3/4 higher at 399.25. Still hasn't breached that $4 mark though. Now, if we look at the soybean market, the soybean trade has been going the other direction all day long. Down 10 1/4 on July at 829.5. In November, down 10 at 854 3/4. Chicago wheat has firmed up again, even though it has been on both sides of unchanged all day long. We have July now 3.5 higher at 470.5. In Kansas City, it has been holding firm most of the day. July now 6 1/4 higher at 423. Minneapolis wheat there for a while last night was showing double-digit gains. Right now it's more mild. Just 4 1/4 higher at 531 on July. So on the wheat trade, do you hear traders around the trading floor they're getting more optimistic now about the wheat market overall, or do they think the corn is kind of pulling it upward here?
Yeah, we're definitely seeing a little bit more upside action in the wheat market. One of the concerns is that some of the feed producers are going to switch to wheat versus corn to feed the livestock. So that's just an estimation. So if that happens, you know, that you're going to see a little bit more demand for U.S. wheat. You know, I want to make note that with the calls in the wheat market, the 480 calls traded 500 times right on the open. Why that is significant is because the open interest is only about 1,100, so it was about half of the open interest. So traders are definitely positioning themselves for a little bit more upside movement.
Now, that's an interesting point. I'm glad you brought that up. If you don't mind, we'll come back here in a minute and we'll take a look at this livestock trade, too. A lot going on there. Scott Gecas is our guest. He is with Walsh Trading, and we'll return right after these messages. Thanks so much for joining us. We're talking right now with Scott Gecas. He's with Walsh Trading in Chicago. And as we take a look at our livestock trade, not necessarily for the faint of heart in the livestock trade this week, especially in the hog market. Man, oh man, we've had so many limit moves in the last 2 weeks. Hogs have been just all over the place. Now, the cattle market is nothing to sneeze at. It's had some big ranges today, too. Let's take a look at where we are in the live cattle and feeder cattle trade. On the live cattle market, we now have June back 40 cents higher at 110.88, and we have the August contract 75 higher. We're at 108.70. We had that news this morning about Japan that they're opening up to all U.S. beef now. And October 67 higher at 108.58. Now, this is off of our earlier high by about $1.25, $1.20, something like that. So keep that in mind. We're higher, but nowhere near the high of the day at this point. On the feeder cattle market, now here we have the August contract showing a gain of $1.50. We're at 144.82, and September up $1.78 right now at 146 even. So there again, that one is about $1.35 off of its earlier high. Now on to the lean hogs. Now lean hogs have been chopping around, and a little bit ago I checked the lean hogs, and goodness, they were down like $2 on the nearby contract. Well, now you have June lean hogs only 90 cents lower again at 91.33. July down 63 at 91.78. In fact, you have October 2 cents higher. So there you go again, Scott, with the volatility in that lean hog trade. Kind of hard to figure out which way it really wants to go. And I imagine the options that you guys work with all the time are extremely popular, but probably a little pricey these days.
Very pricey. And if you want me to be honest, the option prices across the board, grains as well as the protein complex, I mean, the volatility is definitely elevated across the board. So with the cattle market in particular, one thing I want to note was right on the open, there was about 111 calls that traded. So with the big drastic move to the downside with the cutouts as well as the weaker cash pressuring the market, you know, we're starting to see a little bit of bump up, but the 200 contract on the 111 calls in the June that are only going to expire within a few weeks, that's significant. That's a pretty big trade for live cattle. Typical trade is anywhere between 20 to 50 contracts. So that 200 lot that traded earlier, that's a significant, and that leads us to believe that maybe we found some type of low here, and we expect a little bit more bump up going into the seasonal demand.
So just to translate, a 111 call is an option if you can use it or want to use it, that you can buy at 111. They're thinking it will go higher than that, right?
Correct.
All right. So, and a lot of folks betting on that this morning. That's kind of telling, like you say, when all the fundamentals were kind of negative as we came in this morning. How about on the hog side? What's going on there with options?
Well, this morning, the option volume was pretty light. Going into it, we had the expected move. When I was talking about the June options when they first came out, the expected move was about $12 to $13, and that's really significant, seeing that they have $3 limits. Going into today, that expected move dropped all the way down to roughly around $6.10. Still over the limit, but it did come back in a little bit, but that also has to do with the time decay aspect as far as options go. Now, the one thing with the hog market that we're definitely watching is the news coming out of China with the drawdown with the herd. Right now, it's saying 22.5%. We think it's a lot higher than that. You got to remember, when this African swine fever started, they said 10% was going to be their magic number that was equivalent to all of the U.S. pork that was exported. Now they're running around 22.5%. Earlier numbers were 30%. We've seen estimates all the way up to 50%, but nothing is determined, set. So we got to wait and see what those actual numbers are really going to be.
Absolutely. All right. Well, great information. Thank you, Scott, for talking with us. Scott Gecas of Walsh Trading Incorporated in Chicago. Man,